And let's talk about that with Siddharth Bhamre. He joins in right now to give us his sense of this particular issue and more. Siddharth, good having you. Thanks for joining in. The particular idea of trying to get you today, aside of trading ideas, is the high VIX. What do you make of that? Was my analysis kind of correct? Would people be very wary of taking aggressive positions because of the high VIX levels right now?
Good morning, Neeraj. Implied volatility is very important aspect of option pricing, and in different market scenario, this figure changes. So there is no absolute figure which determines whether this is high or low IVs. So in past we have seen that the IVs in a bear market would be in a range of 30 to 40, and on the higher side, on the lower side, IVs never went below 24, 25 in a bear market. And in bull market, of recently, when this Modi-driven rally started, we had seen low IVs of as low as 10 to 11%, and even when there was some volatility which was creeping in market, it used to go maximum till 15, 16. Now we are 15-20% down from higher levels. IVs around 25, 26. Don't expect that IV should go to 40 levels which we have seen in 2008. But in the current context, when IVs had gone to 10 to 11%, 25, 26 IV suggests that we are into sort of small bear market. How people would make money out of it? I think people, before deciding on which option and what is the IV, should decide that what's their view, and then only they would end up making money. We are seeing heightened volatility, and that's the reason premiums are high. So even if bounce back happen, they happen, we are seeing 100, 150 points bounce in one day, and falls are also of equal or probably more in nature. So I won't say that 24, 25 IV you can't make money, but point is that you need to be sure about the direction. This market is clearly sell on rise. Even if put IVs are 25, 26, don't go too deep out of money puts. But if you buy at the money puts and trade it out for 2-3 trading sessions, I think there is scope of making money even after buying options.
Siddharth, hi, good morning. So aside of the VIX, what's looking like the weakest link in the market right now? I mean, how have you read into the collapse that we're seeing in the banking sector, for instance?
Yeah, so that's where the main weakness is there. And what we are observing is that this is clearly an overbought space. If you talk to most of the fundamental investment guys, they are suggesting how private sector banks are still so very attractive at these valuations. I strongly feel that this overowned space, both from FIs as well as DIs, would go under further selling pressure, and that's what we are seeing from FNO data, that there is a lot of short built up which is happening in Bank Nifty and components of Bank Nifty, especially private sector space. So I am not very optimistic. This space probably would give you much substantial lower levels to invest in. So I would suggest traders to sell on rise and investors to hold on to their horses to invest in these stocks as of now.
Should one prepare their portfolios for a test of 7,200 or even 7,000 on the Nifty? Is that out of the window, or that is something which is conceivable?
It's very much conceivable, Nikunj, and we are cautious on that front. And if market has to go to those levels, you can't expect banking to do very well from current levels. And if you look at the options data also, we are seeing heightened activity in 7,200, 7,000 puts. Mind you, this selling, not retail and HNIs are not suffering, because most of them are in option segment. There's nothing called rollover in option segment. Whatever profits and losses they do at the end of expiry, the game is over. Who's suffering in this fall, I think, is mutual funds. Their NAV is coming down. They are continuously investing, and FIs are continuously selling. The quantum of selling and the nature of selling FIs are doing, it doesn't suggest that they are coming to buy anytime soon. Such kind of selling doesn't happen because they want to buy again at 5% downside. They are probably looking at further substantial downside, and which validates for your concern, Nikunj, that is 7,000, 7,200 is an offering.
Before we thank you, Siddharth, just one final question. I heard you mention at the start of the interaction that even with such heightened levels of VIX, it is possible to make money in options. A strategy or two maybe for the current expiry, it could be on the index, it could be on the Bank Nifty as well. Option strategy.
So it's So Bank Nifty has threatened to breach 16,000 levels. There might be today, Shanghai markets are flat, so it is quite possible by going down 50, 60, 70 points, we may again bounce back, say 100, 150 points. I'm talking about Nifty levels, and then probably, buying 16,000 put option in Bank Nifty of current series, irrespective of IV. I think that's a good strategy. But at the same time, what you can do is, because IVs are so high, you can sell 15,000, 15,200 put options of Bank Nifty. So you're giving yourself 800 points. That selling put may not reduce so much of your cost, but that put spread, bear put spread in Bank Nifty on rise is advisable. As far as Nifty is concerned, I think buying 7,500 put option, if there is a bounce back towards 7750, 7800, can lead into profit. I'm not saying that you wait till expiry, but then if market bounces back, there would be reduction in IV. It might go to 21, 22 odd levels, and then correction again would give you more returns in IVs plus delta.
So that's so good chatting with you, and thank you for taking time out and speaking with us today.
Thank you. Pleasure.
Okay, that's the view from Siddharth Bhamre from Angel Broking. But very quickly, let's also get you a snapshot of what the brokerages are saying this morning. Yatin is here to sum up the action. Yatin?
Good morning, Aisha. And today,